Hey guys, what's up? It's Austin Booley with Options Traders again, and today I'm going to go over the importance of a trading journal. I know I'm making 3 videos in one day, but I'm going to be at work tomorrow, so I won't be able to upload or trade anything tomorrow. So I just thought I'd bring this to you, especially since it's been very critical for me the past few days. I've been making the same mistakes, and I would never know the mistakes that I'm making if I didn't go back through and analyze this. So how do you become a better trader by yourself? You keep a trading journal. So let's go over mine from yesterday and today. So the overview, this is just how I set up mine personally. So let's look. So I have an overview. SPX opened with no gap. Pushed down in the morning. The perfect entry was right at support and trend line break, but I hesitated. Market followed an uptrend line the rest of the day, but it was just a little choppy. What mistakes did I make? I hesitated into getting into a position. I made $40 instead of making $150 if I got in where I knew I should have. I need to work on confidence. Trades with commentary. So my entry price per contract was 310. My exit price was 350. Commentary, good trade, but could have been improved by getting in sooner. I knew that it was going to continue down after the support and trendline break, yet I waited. So let's take a look at this specifically, and so I can show you all what I'm talking about. No gap really. We have this nice push down, and we have this trend line here connected, and it intersects the support line perfectly. Since we intersect this support line, and we were showing to show for a reversal because we have a green candle at the bottom at a support line, so we're looking for a reversal. However, we went up, the sellers pushed it down, and when we broke under this trend line and support, I was like, yes, we're going to continue down. But I was like, oh, but what if it doesn't, right? I questioned myself. My perfect risk to reward is right here, because if I enter here, I'm only risking this much. Entering here, I risk this much. You see? So because I was hesitating, I missed out on profits, and I gave myself a terrible risk, well, not terrible, but a worse risk to reward ratio. So if I would have entered here, I would have and held it to this next support line, I would have had $150 profit. But no, instead I traded this break and I got out fast because I was too emotional. I wasn't waiting for it to hit my specified area. It gave me no indication to get out, but I still got out too early. So I record that in my journal. I record why. I record my emotions. I record what I'm feeling so that I can read back through it and analyze what did I do wrong? What could I have fixed? So my problem right now, it seems like, is hesitation. And by hesitating, I'm giving myself terrible risk to reward ratios. I don't know if y'all understand, but if it breaks here, I'm only risking it to go back up to this red line, which is so small. But here, I'm risking it to go up this much back to the red line, which is risking a lot more. So my risk to reward is a lot lower. Now let's look at Thursday. Overview. I missed the initial triangle breakout on SPX in the morning because I wasn't drawing trend lines or drawing lines. I found another entry on the way up but got emotional when I entered and stopped out for it later to go in my direction. Later I entered a put, which was a mistake because it was a trend line and bouncing on the EMA line. It was a green day in the markets. Okay, that's just my simple overview. So let's look at the mistakes. Hesitating to get into a position. When you see the same mistakes happening over and over, you need to find a way to evaluate that, and I'll show you in how I did, or how I'm going to. But you have to be honest when you're doing the trading journal. You have to be 100% honest of how you're feeling so that you can improve. If you want to succeed in this game, you have to do something that 90% of the market is not doing. 90% of the market is just throwing money in there and not trying. You have to try, and you have to bring your A game every single day. How does your A game get better? You record it. So my next mistake, not updating trend lines. Next one, not entering early for better risk to reward. Oh, look, I did that last time, so obviously hesitation for risk to reward is my bad thing. Going into the day with an assumption that it would go down for it actually to go up. So So yesterday I made money. Why? I didn't go into the day with an assumption. I traded what I saw. What did I do today? Today I looked at ES. I never look at ES in the morning slash ES, which is the S&P 500 futures chart. I never look at it, but I did today for some reason, and it gave me I thought it was going to continue down. And that was my first mistake. I need to trade what I see, and I would have never recognized I need to trade what I see if I didn't record this. And also, you may say, okay, yeah, Austin, I mean, I can remember this. Okay, well, can you remember the same mistake a month from now? Can you remember, hey, on this day I made this mistake? No, that's why you have this. You can go back and read through it and constantly better yourself. So to do, how am I going to fix these mistakes? What do I need to do? So I said, make if-then statements in order to trade without emotion. So that's what I need to start doing. I trade the same setups every time, so I need to create an if-then setup. If this happens, then this happens. If the if condition does not happen, then the then condition should not happen also. So I should not be placing on a trade if my if condition is not satisfied. So that's what I will be working on this weekend, going through my trading strategy, working on the if-then statement, so that I know exactly what's going to happen every single time. Where did I get the idea of an if-then statement? I'm currently reading this book, which has been mentioned in my previous videos. It will be linked below if you want to look at it. It's the audiobook of One Good Trade by a proprietary trading firm, the manager of it, and it's very insightful. These traders sometimes go 2 years without taking a loss. These people are so good, and I love learning from them. And trading journals is something that they recommend. So let's look at my trades. So entry price on the first trade 170, exit 160. Commentary: it was a triangle breakout that I missed, so I waited for the breakout above or break above the pre-market high. It pushed up or gave a push-up, signaled a, oh man, my sentence is all messed up. But basically, I pushed up. It gave a signal for a reversal, so I got out. I chased, so I should have entered on the break of a triangle. It would have been a good trade if I didn't chase. Okay, so let's take a look at that trade. Okay. In the morning, I'm just watching it being choppy. I'm just waiting. I'm waiting. I have my line at the bottom. I mean, at the top and at the bottom. I'm being dumb Austin. I'm just watching. I have seen it form a triangle in the morning multiple times, but I had the assumption for the day that it was going to go down. That was my problem. I was waiting for it to go down. But yet, if I would have connected these lines here, it would have showed me a triangle breakout. I could have entered here into this push, traded it up to here, and easily made $100 profit on the day with one contract. But no, I didn't have this trend line. I didn't see the triangle because I had my assumption down. And so I tried to get in at this break above this line. When it pushed up, I entered. It gave a doji for a reversal, so I exited for it later for the market to psych me out and continue upward. So if I would have gotten out here, I could have waited at this momentary little push up here, or I could have just taken profits at this next resistance line, so it would have been in the green. Now let's look at the next one here. Entry price 235, exit 220. Commentary: it would have been a good trade, except I did not draw a trend line. If the trend line was there, I would have bought a call because of the EMA and bounce trend line combo. Let's look at this. Okay, so right here. Another thing, my assumption for the day is going down, so that messes up my whole day. Look at this. Low, higher low, high, higher high. What is this? Every basic trader should know this. This is an ascending pattern, or I don't want to sound like Ricky, an ascending pattern. It is just a staircase. When everything goes up, it slowly makes these higher highs and higher lows. It just progresses upward. But yet my assumption for the day was down, so I didn't see that. Also, we had this point here and this point. I should have connected it for my trend line, but I didn't. So when it broke below this EMA, I was like, yeah, let's short this. But if I would have drawn this trend line, I would have seen that it would have been a trend line and an EMA bounce. I would have bought a call. But no, my assumption for the day, that was my biggest problem. And I'll just go over the second trade for y'all. Where is it? Oh, it was into this push because I realized I was wrong. It was into this push. I got in at 310. And I got out at 310 as well because I got too emotional about it not going in my direction, probably because I didn't have the confidence from the day. But yeah, so the benefits of a trade journal is to show you what you're messing up on and how you can fix that. If you're not learning from your mistakes, if you're not remembering your mistakes, you will not succeed in this market. For the beginners out there who think this is easy, please hear me. You will not succeed if you're not trying. Okay? So I hope that has been helpful and that you will continue to learn and become the best trader you can using a trade journal, using strategies and everything, and that you can develop your own personal strategy to succeed in these markets. Good luck, guys.